as Don says, the beatings will continue till morale
Right.
improves, right?
Right. Can I
um,
can I tell the Jessamine story real quick?
yeah, sure.
Just full disclosure for everybody. Blake and I are on talking pre show like an hour ago, and he says, well, "What do you want to talk about?" And he gives me a couple options, and then I sent something back, and he said, "Well, why don't we fight? We'll fight about things." And it reminded me of one of the greatest trollings of all time. Anthony Jeselnik, a comic, and Norm Macdonald worked on one of those like last comic standing shows, and they went on Larry King, and beforehand Norm Macdonald walks up to Jeselnik and says, "Why don't we do something? You go on and you just start saying what a horrible person I am, and then like to fight in front of Larry King, and then I'll go on and I'll do the same thing, and we'll create a bunch of controversy." And Jeselnik goes on and he tells Larry King like how horrible Norm Macdonald is. And then like it just goes on and on and on and on. And then Norm Macdonald comes out, and Jeselnik said that he could hear Norm laughing in the background, like the whole time he was doing it. And then Larry King's very thrown off by this, and he says, "Well, Norm, what do you think of Anthony Jeselnik?" And he just goes, "He's one of the greats." And I was going to set Blake up a little bit to throw some jabs at me, and I was just going to go, "Look, man, Blake is the greatest trader of all time. He's the nicest guy. I just want to learn from him. I don't know why he's behaving this way."
It's always fun to say agree with whatever insult. Yeah, totally. You're right. I do have a face that only a mother could love. That's totally true.
Yeah.
And even
All
my mom's not sure if she loves me that much. So
right. All right. So what are you seeing right now? What are you excited about? Another odd day. Chopping the Nasdaq, chopping the SPY, chopping the Dow.
yeah,
Things.
we weren't really choppy, but we're chopping it at an area like it said at the beginning. Math is
Right.
magical. For me, this we do see setups, and we do. I'm as I've said to you this before, I'm a big distribution player,
Yep.
um, and predictive distributions. And so as we're looking at these things, you can see we really haven't done anything since we got to the area that we'd consider overbought from a distribution standpoint from last month into this month on the S&P 500. And one of the things that we know is this drive is being driven by AI primarily, and math is magical. So I know that people overlay charts, and I know I saw your silver chart. I always say, show me the math. So
Right.
I'm looking at these moves, and I want to talk about why you like the AI move and why I can't bet on it, and kind of compare and contrast, but then also set up some option trades in AI and in crypto and in currencies and in base metals. I'd like to take some time, but I always throw in the
Yeah.
correlation study because I want to know that the math backs what I'm visually seeing. So if you go into the correlation study, and if you've ever used spreadsheets like Excel, this is the same math. So if I put in AIQ and put SPX down here or SPY, it doesn't really matter for this example. This is the correlation that is the highest, that the S&P is being driven, or the SPX is being driven by AI. Now, you have to do this. I don't know why they don't default to 1 and -1, because you can't get past a 1 and -1 correlation. So if you zoom in on 1 and -1, you can see this correlation is so high, so steep, and so long that we're in the 80s and 90s constantly, except for this little blip in
Right.
July. And we've maintained a positive correlation, and I always look for 50% or higher. So besides that little blip, this last 6 months have been 80, 90% correlated.
Right.
So if we're not breaking higher in the S&P and we're not breaking through that clear distributive high level for me, then I can't trust the breakout in the equity or the AI space, because the S&P is AI right now.
Yeah.
It's just a bigger chunk.
Can I show you a chart
Yeah,
real quick? I
yeah,
gotta I gotta pull I gotta pull the screen from you, but
certainly. Let me
I
just
mean,
make you the co-host so you can do that.
thank you. So what you're looking at right here?
You have to share.
Oh yeah, 1 second. I've had some issues with this. 1 second. Share. Here we go.
And just replace instead
Coming
of
through?
kosher. Yeah.
Nope, not doing it yet.
No, you're good.
Okay. Share. Okay, one sec. This chart, I think, speaks to where we are. And there we go. Okay. So this is Bloomberg, JP Morgan. It's from a week ago. AI is legitimately the market. Since ChatGPT launched in November 2022. Now let's compartmentalize this a little bit. November 2022 was when the gilt crisis happened. So that was the liquidity low of the financial markets. That's where everything bottomed out. That's where we had the situation involving, concerns around what was happening over in England. And the Fed had to pivot and the Bank of England had to pivot. Fine. But the timing of this is the same, right? ChatGPT launches. AI related stocks have delivered 181% in the key names. The rest of the S&P 500 is at 25%.
Which is
Okay,
still good.
which is, yeah, it's fine. But also remember, liquidity expanded.
Mm-hmm.
And I don't know what the debasement of the dollar is going back to 2022. I know it was 21% since 2000, since 2020. But then you look at the rest of this. Okay, what else do you have? 75% of total index return gains, 80% of earnings growth, 90% of all capex. This is the market. This is where we're moving. So, my argument on the macro side remains the same. I expect liquidity will expand through the end of the year, late 2026. That's Michael Howe. I've shown that chart multiple times in terms of how liquidity expands, how more capital in the system. It's all concentrated here. And it's going to be another at least 18 months of this. I don't see any other reason for people to rotate into oil, rotate into consumer defensive yet. And this is momentum chasing momentum.
Yeah, and I would totally agree with that.
Yeah.
And then when I, say if we're looking at this, if we're topping out on the S&P 500, can you chase that momentum, or are you seeing signs that the momentum is fading?
Sure.
And again, it doesn't have to fade. I just can't bet on, if I'm looking for a directional move, I can't bet on it going higher. But if you show me a stock that's in here and you want to say, if you want to say, I've got a position on, I really like AIQ. I don't like AIQ right here. But if you have a specific stocks like even Datadog or one of those like that, you say, hey, this is breaking out. I do like this one. It's going to be more of the the back end infrastructure. But if we're looking at those, I can get behind it if the option trade works out.
Sure.
And if the options are there, because I want to have a defined risk trade. Now, Datadog, talk about something that I'd be excited for. Well, I'm gonna give you my background, Garrett. I don't know if you know this. I owned a data center. We owned a multi-million-dollar data center in the 2000s. So me in my early 20s, me and my best friend and business partner, we built a data center because we thought we were super intelligent. Let me tell you where my youthful ignorance didn't understand. We said, hey, the internet, and we recognized even back then, the internet is the gold rush, but like the gold rush was, no one's going to get rich except for one or two, right?
Yep.
And said, so let's sell the picks and shovels.
Yep.
The old idea, you want to really get rich, sell the picks and shovels to the gold diggers. And so that's what we did. We built the data center for that. The problem is our data center, our picks and shovel store cost us $2.5 million in the early 2000s.
Right.
So we spent a lot of money on the picks and shovel store. And then when everybody stops paying their bills, it makes it very difficult for us, right? But Datadog is going to be something like that for AI. And we know that there's more and more infrastructure until you see AI collapse down on its own weight. And I'm truly saying collapse down. You need to watch for that to happen. Until that happens, you're still going to see money moving into Datadog and data centers in general, and into utilities. And so I like this, even though I'm not going to chase AI, I will chase the picks and shovel stores, right? And the people, the general stores selling into this. And my process is always to start with the signal and then check what the options say. So I like this as just a stock purchase, flat out a stock purchase. But I would always go and take that next step and say, what does that mean? And like you showed on your little chart, that you had the infrastructure, well, the background wasn't called infrastructure, what was it called? capex.
Why was my chart little? Why did I have a
It
little?
is because it didn't go full screen. I'm just
Oh,
saying.
okay. Okay. All right.
It's
I didn't
your
know we
chart.
were measuring.
Your
It's
your
okay.
chart was fun sized. Anyway, so as we're looking at this, as we're looking at the move,
Yeah.
I then would say, what are the options like on something like Datadog? Are we overpaying? Or are we underpaying based off of its history? Because
Right.
there's upside here. I mean, even just retesting the highs, which one 52-week high test doesn't scare me. I think we
Sure.
break through those easy. And so I would be looking for it to get up into the 160, 163, 164 even area. So then I just jump over the options and say, what does that tell me? Well,
Right.
current IV ranking is 34. So we're pushing up to 30, anything up below 35, I want to sell. Or I mean,
Right.
buy, excuse me.
Right.
I want to be net long, whatever direction.
Sure.
But over 35, I want to be a seller.
Yep.
And so we're right on the cusp. And I think we could probably structure this either direction, but I think I probably want to sell premium because if it doesn't go higher, that's okay. I can
Right.
still collect the premium. And that's how I start structuring these out with something like Datadog.
So if you're looking at this is 145 a share.
Mhm.
And this is one of the things that before we got into the Norm Macdonald conversation, you laid this out very well with Palantir. That like you didn't have to chase the stock to the upside. But I'm looking at Datadog right now.
Mhm.
It's $5 from its 8-day moving average. It's about 9 from its 20, which again I'm willing to trade around that. I'm seeing strength in all of the momentum indicators. What would let's talk about the differences between trying to go long and having a lower probability of profit, maybe a spread versus selling premium down at the say 130 to 125 level.
Well, and I have very specific structures in the way I approach it.
Mm.
So if
So
you buy it at 140,
how do you approach it?
so I'm going to walk through the three different ways.
Well,
Okay.
let's do it.
Number one, 145, like I said. And by the way, you say it's about $5 off. Yeah, we're $6 up today.
Okay.
So
Yeah.
almost all of that, 3/4 of your $8 move is just today. So today's a
Right.
big deal. So that's the first step. The second step is like, if I buy the stock, how much risk do I have to take, assuming no gaps?
Right.
And I own everything that I do, good and bad. And so we took an FCX trade and we had a gap down because we had no idea there was going to be a collapse and deaths and missing people.
Sure.
And so those kind of things will happen. But we don't really plan. You can't live your life planning on the one in, the black swan events, the one
Sure.
for FCX once in a lifetime for their company. I don't think they've ever had this kind of situation. So when I look at Datadog, there's always the risk that you have the gap down. So if we buy the stock or we sell the put, either way, we have risk to a gap. And so the cost at 145, I'd still go into that chart and say, what do I really expect, assuming there's no shock and awe type gap? And
Mhm.
I would go down generally to the 0%, and where we have that lower shadow, I'd probably give that shadow about 135. So am I willing to risk $10 for the move up? And I already gave you my target about 160.
Mhm.
$10 for 15, that's a 3 to 2. 3 to 2, I have to be right 40% of the time. Okay, so that's in the back of my head. I now have a probability, a risk, a reward on if I just buy the stock.
Right.
Now that's unleveraged or 2-to-1 leverage, whichever way you go on that one. And now I go look at the puts and let's take a look at selling the premium.
Mhm.
We already said it's kind of on the cusp, right on the edge. And as I'm looking at this, I have a sweet spot for selling short puts if I want a high probability trade of 2.5% per month. Now this is a couple days more. And if we're looking at 2.5% to start with, I've got to add an extra strike. This is kind of a cool high safety net, a big safety net. If I'm going to swing on this trapeze, this is a very safe position because I like to get paid 2.5% for 1 month. And if I get paid 2.5%, I can pay attention to the delta of 27, and we could sell a little bit higher. If I'm just doing a short put, just the short put, I'm either going to do at the money because I really want to own the stock, or I'm going to look for that 2.5%. And right there, that's 136.
Right.
So do the math with me. If I'm assigned at 136 and they pay me somewhere between 320 and 335, we'll just say 325. That means my cost basis, if I get assigned, is 132.75.
Mhm.
So I get paid 2.5% with the understanding that it would have to fall
Mhm.
from 145 to 132.75. And I'm keeping it at 145 because that's what we
Sure.
started talking about. So 1250-ish divided by 145, I have an 8.6% safety net where I won't lose a single dollar. The stock would have to fall 8.6%, even on a gap,
Mhm.
before I lose a single dollar, and yet I'm getting paid 2.45% for 1 month, 2.5% for 1 month.
There's
That's super safe to me.
Yeah, it definitely is. Now, a question that I have is
Mhm.
when I'm from the school of Tasty Trade, and I've known that whole crew and all that research team, and we kind of operate in the same ecosystem. There was a time frame that was always laid out to me that you wanted to stay within 45 days. What is your view of time when it comes? Do you want to stay 30 days? Are you willing to go out 60? Are you willing to go out further if there's something that you really want to own and maybe you can get a higher distribution as a result?
I would bet you 10 to 1 odds you will not get a better trade if you're just selling,
Hmm.
even if you want to own it, if you go past the 45 days. And so I always say if I don't want to own it, 21 to 28 days. If I
Okay.
do want to own it, about a month. But a month, if you run the numbers, and I've done this over and over and over again, if you run the numbers, you don't get a higher probability for the premium per month by going further out or in time or strike. And so it's always better to do the 30 days. And I used to joke with people, I can tell you where things are going to be at within 30 days a lot better than I can tell you where they're going to be at in a month or in a
Sure.
year.
Sure.
And statistically that's true. But I actually can tell you probably more things are going to be in 30 days better than I can tell you where they're going to be in a week. It's
Right.
just the market moves based on option pricing a lot of times. So, and I can show a real quick example of that. I mean, look at the probabilities. We get paid at $3 and we'll call it 325, like we said originally, at 136 with the 27 delta. If I
Right.
were to take the time and go out 3 times that, so 3 times
Sure.
32 is 90. Well,
Sure.
I'll go even further, all the way up to January. And looking at the options, trying to get that same $3, we have a
You got
delta
to
of
go down to
14.
115. Right.
Yeah. And if you try to get what we're talking about, triple that, you
Hmm.
need to be up here at 130, 135 again. And then your probabilities go down.
Hmm.
So you get paid less per month and your probabilities of success reduce. I just don't see it as an effective way to add more premium. It's better to sell it, control it, redo it.
Now, are you talking specifically around cash secured puts or spread?
Yes.
Because
Cash
okay,
secured puts first. Yeah.
and
Cash
and
secured
and
puts
and why
first.
do you prefer cash secured puts versus spreads?
Well, this is if I want to own it.
Okay.
Yeah. If I want to own it
But couldn't you own it using a spread and then utilize the leverage as well?
in a vertical or something
Yeah.
like that,
Yeah.
you could, but I mean, my concept would be you're paying for the insurance when I want to own it anyway. And if
Okay.
I'm way down here, I already have that 8 to 9% probability safety net.
Right.
Anytime I get better than twice what I'm getting paid, that's interesting to me.
Sure.
Because again, I'm getting paid now. I have almost 3.5 times, 4 times the safety net of what I'm getting paid,
Mhm.
and a 78% probability of success.
But I've seen situations where I've looked at spreads versus the cash secured put, and the amount of money that I can generate, it's basically I can make the same amount of money but doing two or three spreads versus actually putting down, say, $13,000.
Mhm.
I'm putting down 1,000, and I'll generate the same amount of premium. So I
Sure.
would just say that it's effectively the risk that you're willing to take.
Well, and like I said, and the difference is this is stuff I want to own. So if I'm doing the
Sure.
spreads, I'm going to drop this down to the October 24th, and I'm going to play it all for the reward risk.
Hmm.
And that would put me right here to the
Sure.
1 week less. And I'm going to look at my implied volatility. I'm going to look at my probabilities. I don't sell anything above a 42 if I'm going to do that, 42 delta. And I'm going to try to hopefully, and this one's not going to work that way. I was going to say hopefully get a skew that's going to work my way, but it's not. So I'd sell to say the 143 and buy the 141, 142. And I actually always go $1 wide, which really irritates people. But again, it's better reward, and I know my probability is better. A lot harder to expire in between and break my spread versus completely obliterate it or win.
Right.
And so at 42 cents, let's call it 40 cents, 40 cents credit, that means 60 cents risk. I have to be right 60% of the time. And I'm going to pay attention to that delta, which was a 41. So I'm at kind of at pot odds as far as the trade is concerned, but I'm still getting paid 66% return on risk.
Yep.
And so, yeah, if I'm doing the spread, again, I drop it down shorter time frame. If I want to get assigned because I want to own it for the long term, I want to cover calls, I want to sell calls against it while also collecting dividends, I will sell just the short put so I can get assigned occasionally.
Okay. Okay. All right.
Now, I don't mind the idea of going super wide spread. If you're, if you're going to push it way out and go out there, I don't mind that. But
Yeah, I mean,
more of a safety net.
I think that I'm still willing to own the stock. I just want to utilize the leverage if it's possible, and still generate the same level of income that I would otherwise. And I'm willing to. I don't want to tie up that much capital. I think the idea of putting down $13,000 when I could probably do it with 1,200 is a little bit more appetizing to somebody like me. But
Sure, but if you get
that's how we are.
assigned,
Now you got
now
now
you're
you
going to
got to
use
go
up.
3 times on it. Yeah, 100%.
Yeah.
Or you have to eat it, or you manage you manage the risk with, all right, I'll allow the position to maybe drop the same amount that I'm trying to generate, which might be a 20% return.
Right.
All right, Blake, we're going to start a new segment.
Okay.
Okay, and
What is it about?
It's called Blake Reacts. Okay.
Live reaction here. Okay.
New thing that we're going to do, and this is going to be, I'm going to show you a couple of charts, and I'm
Okay,
interested in your worldview and how you perceive these things. This is a chart that just came out, and it basically says valuations are not good timing tools. Well, we know that, right? But what is your perception in the fact that right now we're looking at the Case-Shiller index, which is at 40.15? What is your argument right now? How do you feel about a market that is valuated the way that it is? Are you concerned about it at all, or are you just trading the market as it is?
yes.
That's the
There's my
reaction we
reaction.
were
That's my
looking for.
reaction.
All right.
Yes. And what it comes down to is I do a lot of trading intraday that doesn't care about that.
Yep.
Like the 10% club, but I do extremely care about these that we are extremely overweight. Now, I know that the professor hates it. I love the Buffett index. I love the idea of market cap. When we're trading at, if you combine all the publicly traded companies, which still don't account for more than about 28% of all business in the United States, and yet we're trading at 250, 300 times,
Right.
Leverage. That's, 250%, excuse me, not 250 times, 250% leverage on the total market valuation. That is absurd. And so it's the same thing you're seeing here in those ratios being at these high levels. I just don't think PE standalone is enough.
Correct.
But when we really talk about the cap rate as well as the price to earnings rate, now you're saying that their earnings were 40 times their earnings, which means we're pricing 40 years worth of returns
Right.
in the current price model.
Not
It used to
just
be
that, we're also
Yeah.
at 3.1 times revenue, which is an all-time high.
Gross revenue,
Gross revenue,
just money flowing through.
right. No capex, no taxes, no, paying for payroll, straight money coming in the door. It's an all-time high. All right. Next thing we're going to react to. How do you feel about the fact that the Magnificent Seven is at an all-time high of 35%?
As far as the total, I'm trying to read your chart.
Total market weight of the S&P 500.
Yeah. And again, this is what I think is the reason why I can't chase the AI stocks in the Mag 7. Because as we continue to push to these levels and push up to the record highs, they're not, this feels like, again, I was part of the .com world.
Right.
It feels like that. We're not generating the income except NVIDIA is selling to people that are buying their chips, but are doing it on credit that NVIDIA is providing them, right? So we're really not generating revenue and earnings that we claim that we are. And so yet those same 7 stocks are getting these record highs. Can those 7 stocks support the market? And obviously the answer is no. They cannot, they will not, it's impossible for 7 companies to support the entire economy, because how many people do they employ?
Right.
How much revenue and employment do they create? How much growth in GDP do they really add? When, I mean, the fact that we're calling earnings when they're unrecognized earnings and unearned earnings, just because you sign a purchase order and take out debt for it, when they say, oh, and you can turn it back to us and we won't take it if you ever need us to, that's not real money. We've become, the Mag 7's a paper tiger. That's what it comes down to for me.
All right, next chart for you. I got one
Yeah.
good for you. This is going to be a good one. This actually, it's not a chart; it's a picture. I want you to tell me what you think of an economy where this woman makes $30,000 a year or in consulting fees to name your baby.
I was trying to decide if I was going to roll my eyes until they popped out of my skull, or dry heave.
Next chart.
I don't know which reaction to give you on that one.
Move index. We've just hit this new low coming off that January 22. What are you seeing in the bond volatility right now?
Well, I actually have a long-term view on bonds that this is time to buy, because we actually have pulled back to where I think that we are going to see prices move higher to fix that long-term yield to come back down. The fact that the move index is way down here, you know, does that guarantee a lift? No, it doesn't guarantee. Even lower rates doesn't guarantee a lift, because until the rates can get low enough that someone like me, that, I don't have much on my mortgage because it's free money, but I have a 3% mortgage rate. Why would I refinance and why would I move?
Right.
If so until we get the long-term 10-year prices to go through the roof and the yields to fall back down, and this is what I said during the Fed, 25 basis point cut is not going to get more hiring, and it's not going to drive the 10-year until much later. It pulls on the string, but that's it. It doesn't really do much.
All right, last one, because I know Matt just walked into the room, but this one's going to be a little bit different. This comes from Quote the Raven. S&P
Quote
500,
the Raven.
Quote the
Nevermore.
Raven. Christopher Irons. S&P 500 priced in gold. This is what the stock market looks like in real money, big head shoulders pattern. If we go back to 0.05x, that would put S&P 500 against gold at 12,000, or the S&P 500 at 1850, or they meet in the middle at 9,000 and 4,500, which would be gold 2.5 times higher, and the S&P 500 down 30%. Are you paying any attention to this relationship?
I love this relationship, and Brown and I have talked about it as well. He likes to show the chart of S&P and gold, and just remember, owning gold there's a cost to it. For all of you that are saying buy and hold gold, remember there's a cost to it. It's cost of carry, storage, blah blah blah, but it's really a cost of carry based off the interest rate. And so,
can you explain that real quick?
Yeah, physical gold takes money to store money. Really short, and we always compare everything against a risk-free premium, and in managerial finance, everything is always compared to a risk-free premium. What if I just bought a bond versus investing in gold? And so generally speaking, this cost of storage and everything else is roughly the same as the 10-year bond yield. And so really, gold is losing 4% in cost of carry, but we're accelerating faster in the dollar, like you already commented, the dollar being down 21% really off of its high. So the dollar's purchasing power is down so much. When we're looking at this, what this chart is telling us, that it's not that the market went up. It's the dollar has been obliterated. Your purchasing power is gone. If you did not understand that spike up and then collapsed down in 2000, that was you losing purchasing power. Market can go all the way back up, but you and I lost purchasing power. Our dollars literally go at this moment in time about 40 to 60% as far, depending on whether we're talking about groceries or gas. And if it weren't for oil pulling back to its lows, it would be worse. So I absolutely think this is critical to pay attention to. And I expect to see, frankly, more of it, that you're going to see that gold could stay here and we could still see the collapse in the S&P. And that's going to be, again, that stagflation tool.
And as you said, and you put it very bluntly, this is stagflation. That's where we are. That's where we are right now.
You can't convince me otherwise.
Yeah, and we have a special guest right now. Matthew doesn't realize that his green screen is not on.
Oh.
Or
you just have a lovely green curtain.
Or he's got a green curtain we don't know about, or he's a superhero we don't know
about. Are you guys making fun of my remodel in my office here? Is that what you guys are saying? The green curtain's not?
It's not functioning as a technical device.
Yeah. First day with the green screen, so bear with me. I'm probably doing something wrong here. But I'll get it squared away for next time, I promise. But anyways, yeah, I put that bad boy together yesterday while I was watching football, So here we are, one step at a time. But yeah, funny story about gold. When I was a younger man, probably almost 20 years ago now, I started listening to one guy. And his initials are PS. And anyways, so he said perma bear, and like a perma bull on gold, right? And so I never heard anybody with so much conviction talking about how everything's going to go, everything's going to crash, and it's going to be hyperinflation. And so I went and bought some. It's funny to even admit this, but I went and bought like some of those little gold coins, thinking like, we're all going to be doing commerce, with our neighbors, with these little tiny gold coins, because the dollar is going to be worth nothing. And oh man, yeah, good times, good times.
Matt, I wouldn't poo-poo that concept. I think you're going to get there. I just think that you might have been a little early. I'll just put that.
Hopefully it never gets that bad. I mean,
well, that's this is where we could fight. And this
Blake,
is I was here
nice, and you're so
I know
wonderful.
I've been so nice to you. I know, totally. I'm better than you than you deserve. Anyway, so if you buy a gold brick, I always joke about this. Say, if it really gets to that point, Matt, is if it gets to the point where you really have to use that, you're running around with a cheese grater and a brick of gold and in a scale, right? And saying, here, let me buy something from you. No one has any way to prove that it's real gold or that it's 24 karat or anything else like that. And the second thing is, if you come to me and you have your brick of gold and you want to buy my sandwich, I will either sell you half of my sandwich for your brick of gold, or I just might say, here's the sandwich. You hand me the brick of the gold. I hit you in the head with the brick of gold, because that's what we're really talking about, right?
Right.
Chaos. If you're really talking about that, I've got a brick of gold. I want to buy your sandwich. Punk. Now I get the gold and your sandwich and my sandwich back. So no, I think if you're really looking at that kind of disastrous catastrophe type of economic situation, we already have so many examples all over the world. Venezuela and is certainly a place to look. It will find the easiestly transferred money, even if it goes into other currencies. I drove with an Uber driver that was from El Salvador, and he said, all I do is send down prepaid debit cards in US dollars to my family.
Wow.
And so because they try to turn to Bolivar within a week, that's worthless.
Yep.
Yeah.
And so he said, they just swipe, because everybody takes Visa. It's everywhere you want to be. Anyway, enough of that. You don't need to worry about that. Don't buy and hold gold.
Blake. I feel better.
I won't hit you in the head with you can have half my sandwich, and you don't even have to pay me.
Yeah, I still have most of that, but I sold maybe a little bit of it when gold and silver went parabolic. I think back in like the first time, like back in, I think it was maybe like 2010, 2011. Anyways, but yeah, I still have most of it, but still, in a bunker, highly secured bunker, So,
oh yeah, definitely store your gold with somebody else. Do that.
Yeah, absolutely.
Then it'll be easy to get it. Wait.
Yeah.
All of my gold is scattered across Baltimore County, and there is no map. Well, it's actually tattooed on my back, but
good to know. one strategically placed dart, and then nighty night Garrett and
oh my gosh. gosh. Well, anyways, guys, let me say my piece here, and I'll get out of your hair.
Take you
So
off the rails
anyway,
before you even get on. All right.
but no, seriously, I enjoy it. But I did want to pop on here, guys. And and Garrett, so with your NVIDIA trading, I was curious, are you now you're obviously like your expertise is you're taking the macro environment and it's sort of like parsing it down into actionable ways to trade individual equities, like maybe not the actual shares, but like the ETFs
Yep.
and the options. Like, could you like maybe I'm just really curious, like how if you could kind of sum it up for me, well not sum it up, but at least I guess give me a nugget. Like how do you process all that? Like how do you take that information and sort of formulate it into actionable ideas?
Well, I think Blake and I were just talking about this momentarily ago about the fact that AI really has driven this market, and every major innovation that has transpired going back to the 1920s, you get these waves and they start, you know, 3-year cycles. We've already had 18 months. We still are in the middle of this liquidity cycle. So there's ample opportunity and upside. And I say this because, Blake was just talking momentarily ago about the idea of he invested in a data center. I have a lot of money. In fact, the bulk of my net worth is tied up in what you're looking at. That is a battery storage company in Simo, Finland, and we are building a data center right behind it. And the reason for that is because this is where the money's moving. This is where it's going. So if you are a person who is sitting here saying, "Well, I need to be in gold and I need to be in silver," because you're worried, we just talked about, that construct. The
Mm,
reality is the growth opportunities and where investment is, it's all in AI. We would be in a recession right now if it were not for all of the investment in this. And this cycle is going to go on for years. Now, NVIDIA is the crown jewel. And from a momentum perspective and trading things like the NVDL and the NVDQ and the ND and NVIDIA itself, all of these concepts, all of these things from a momentum perspective, when capital is flowing into the market, NVIDIA is driving the market. And when this market is tightening and liquidity is cycling back, NVIDIA gets crushed because leverage in the system dries up very, very quickly. It has really nothing to necessarily do all the time with the AI trade. NVIDIA itself has become the biggest player. It is pick and shovels. Blake invested in the pick and shovels play. I'm in the pick and shovels play. At the end of the day, though, it's really about understanding that money flows here. And when
mhm.
money dries up, it escapes from there because all of the leverage comes out at the same time. So based on what the flows are, based on the way that we trade momentum, based on the way that we understand how insiders work, based on the way we understand liquidity, and based on the way that we understand technicals, there's always an opportunity. And whether you're a day trader or a multi-week player, or you're talking about what we just had a conversation about on the short duration, there's always a trade available if you just understand this single company that is basically defining the entire global economy right now.
Right. Okay. Yeah. I mean that makes a ton of sense. It is like you said, it's kind of the old NVIDIA has its own surrounding ecosystem, and yeah, it's pretty cool to see how some of these minor companies are kind of it's not easy to pivot a whole business model, but it seems like some of them are starting to pull it off, which
But
is
you've
pretty cool.
seen, yeah, and you've just seen today. I mean, look at any one of these companies today. The moves that have happened today are not accidental. Companies like Hive Digital, look at
Hmm.
Riot, look at ROIT. They're all up today massively, massively. And at the end of the day, none of these companies can do anything without NVIDIA. They can't do anything without NVIDIA. NVIDIA is the market right now, and the whole ecosystem that is effectively keeping our entire economy out of recession is right in front of you. So we're
Yeah.
going to talk about some of these names tomorrow. We've built a special report that we're going to release
Okay.
after our session tomorrow. I mean, all of the momentum is being driven by one company. And I've never seen anything like it in my life.
Yeah, it's awesome.
Yeah.
Okay. Well, thanks for that, Garrett and Blake. So, guys, I just want to just one more thing here, just contribute here, and this is all for all of you that are watching, loyal Theo subscribers. So, I did want to let you guys know that we did fill up that first initial round of 50 people for your class, Garrett, but I can still enroll some folks. So, for whatever reason, it's not shut down or anything. So, for what it's worth, I can still get you in, and depending on your how long you've been with Theo, I might have a special bonus for you. So I'll kind of leave that as a mystery for you guys. So just
Check out that comment right there. JW Bullet, the riot trade. Please.
nice. Okay.
That's
Yeah,
what it's about. We
JW.
did a trade. We did a trade built around selling the spread on Riot. Paid for his Nvidia. We have a lot more of these coming.
Absolutely. Yeah. Somebody said my Northern Lights.
But again, I think at the end of the day, like if you want to understand how to trade, if you want to understand the markets, you got to focus on where the concentration of capital is. This is the heart of where this market is going to be over the next at least 18 months. And then the other side around it, as I explained, when we have these big sell-offs, when I first joined here, when I came on March 1st, I said, guys, we're in the middle of a crisis. When crises happen, that becomes these huge opportunities that people don't know how to trade. And this chart speaks for itself. We were on air shooting this, and we were saying, hey, the insiders just bought. Buy the market. Well, look at this. 88 took you to 181. And these opportunities are going to happen over and over and over again. We're going to have more of these in the future. And if you want to learn how to trade it, and you want to know exactly when the optimal time to time the market is, that's going to be one of the core things of what we're going to be discussing during our first masterclass on next Tuesday.
Awesome. And again, I want to kind of reiterate, I think I mentioned this on Friday, but everyone, you're obviously going to get, live classes with Garrett, but you also get to keep the recordings. So you can, 2 years from now, 20 years from now, whatever, you can always go back and reference those. And so of course you're going to get some trades with Garrett, but the most important thing is to build a skill, and you're going to be able to do that. You're going to, Garrett's going to give you those honorary master's degrees and stuff in economics like he has after you get through his course. Just kidding. But you guys understand what I'm getting at here is you're going to learn how to process things like Garrett does, and be able to, basically put those into trades where, you put the odds in your favor and you can make some money, and build up your account and be better at the end of the day than you were at the start of the day. So guys, yeah, go ahead and put it in the chat here, a 1 in the chat, and I can someone might have just called me there. I'll call you back. But you guys can call me or text me at that number too, or you can DM me, or put a 1 in the chat. All right, guys. So I don't want to push too hard, but I did want to make you guys aware that we still have spots open for the NVIDIA Bootcamp. And you'll get a special bonus if you talk to me and I get you signed up. All right, and I'll reveal that bonus
and
on the
Matt,
call.
real quick, like not too many more people because I want to keep this intimate. I want to make sure that if people have questions, I don't want to have, I don't want to be inundated with questions. I want to be able to reply to people with
Okay.
200, 300 word responses and not one sentence responses.
You got it. Okay. Yeah, I'll keep that in mind because we did fill up, but yeah, we'll try to not too many more than 50.
Cool.
So
I appreciate it.
All right, Garrett. All right, guys. Thanks. See you, Blake.
Hey, thanks. See ya.
All right, Blake, hold up.
Yes.
I got another one for you.
Yeah, another React.
Look at that.
This is what I was talking about, though. So
right.
Here's the chart looks amazing, but it's nowhere close to the AI versus the S&P 500 correlation.
Sure.
In fact, if you throw that in, I actually ran this when you shared it. We're at about 50-some% correlated over the last, I always use 10 days, so it's 2 trading weeks to track the data. And it is, I think this is primarily that dollar weakness more than anything. It's back to the whole idea. If you look at the S&P versus in gold terms, you're just not getting the same view. And I compared the AIQ to, as far as correlation to silver, SLV specifically, And the correlation, yeah, we're about 55% correlated. So it's not like that 85, 90% that you're seeing with AI versus S&P. So
So then
it
what?
just doesn't have.
But the UDN, the bearish index for the dollar, has basically been sideways since July,
Mhm.
and here you are right here, right, 36 to 43. So, what's your argument on what's driving that?
Global deflation or global inflation, I should say.
Okay, that makes sense. All right.
Global inflation, all currencies are losing, but when you look at the UDN or DXY or anything else like that, you're not looking at the dollar's purchasing power in silver terms or AI terms. You're looking at it in comparative terms to other currencies. The dollar index is 55% euros versus the US dollar, and then 15% pound, 10% yen, 8% Canada, and so forth. So you're really not, you're saying, yes, I'm comparing the dollar, but you're looking over here at currencies rather than looking at silver and
Okay.
the market over here. So
Okay.
yeah, and the math, like I said, it's just the correlation is still positive. It's 55%, but it's nowhere close to that 95% correlation you have between AIQ um, and the S&P 500.
Now, how should I feel about the fact that as much as I love Nvidia and I love Palantir, and I know that you like Palantir, the top performing stock since COVID is Build-A-Bear.
That's so. It's actually, well, two things with that one. One is that I actually when we add to positions in the short-term scalping and
Yeah.
the 10% club, or in futures, you'll hear me say we're running with the bulls or we're building a bear. So yeah, so if we're adding to a bullish position, we're running with the bulls. If we're adding to our bearish position, we're building a bear. But I mean, it's the same absurdity when we had GameStop. Do you really think that you can do that? We can always say, well, the future, you could say AI is going to, run everything for sure. That's a reasonable argument. I just don't see the multiples justify that we're going to have that many more people buying stuffed animals. Is it because the tariffs have stopped shipping in stuffed animals, so now we have to build them here locally? It's just the onshoring of all the stuffed animal creation.
It's glorified taxidermy. I, it's just a wild thing to take a look back on. Enterprise value on this company is $1 billion, 930 million market cap. So they don't have like horrible debt, but then you look at debt to equity, and it's again, the markets are not supposed to make sense, but
No.
this is a very high capital efficient company.
Mhm.
Like
Yeah,
their
and I
return on
love
invested
cash
their
flows
return
and
on
good
invested
returns.
capital is 25%.
Which if
I
you're
don't get
buying
it.
10 cent, well, you're buying 10 to 20 cents of material and then another 30
Right.
cents of fluff. It's all about your machine and your advertising. So it's like the popcorn at the theaters. Your costs are not that high to, and you've seen all the craze when they act like they're cooking your stuffed animal. I don't have it. I have all adult age boys, and so I never did that. But
Right.
apparently, is all the craze is to have those stuffed animals.
That's a
But
high short float though for a company with an ROIC at 25%, gross margin at 56.
yeah,
That's a really high short float. Like if you look at John Deere, which is equally capital efficient. In fact, return on invested capital is only 7%. Their float's only 1.7. So
I forget that. I thought I was the only person that liked ROIC, and I love the fact that you look at it. It's one of my favorite
it's
indicators.
I think it'll easily the most important because capital efficient companies is the basis of what Warren Buffett does.
Mhm.
It's what he's always done,
Yeah.
right?
It tells you how they not only how the management team is working, but how well
Right,
they're using their money. And I
right,
say money because I'm talking about capital and debt.
right.
It's
So
they're
you look
pumping
at
their money
them,
back in.
right? You look at them, or you look at like a Domino's. What's Domino's ticker?
Right there.
DPC. Uh, that's a very high ROIC. I don't even know how that's mathematically possible, but we'll figure it out.
Because they put it all back in.
They put everything back in.
Must be.
This company is incredible. They just it's $1 to make a pizza.
Yeah. Well, it is. It's like I said, it's the popcorn. It's the soda machine.
Yeah,
Yeah.
absolutely. So
And
yeah,
so,
there's a lot of those names out there. All right, KKTC asking, and if you
hmm.
want to drive for the next 8 minutes on this one, I'll pull some stuff out of the chat. What's up with the Etsy breakout?
Let me pull this over, reshare, because I stopped. So when if I move my mouse when we're co-sharing, it'll keep skipping. So I had to shut it off there. What's with the Etsy breakout? So let me just show you what I think there's a fundamental reason behind this. Um, and I think it is the very concept that we just talked about at the very beginning, and that is if we're going into stagflation, what is Etsy? What is it really betting on? You're going to be betting like I am that you're going to be a bunch of cottage industries trying to make money. Etsy is supposed to be handmade, homemade. Same idea of Build-A-Bear. We're doing it here local,
Right.
but really this is saying all the people that are going to make their own stuff and try to make it, ends meet. We're not making more money. Everything costs more. We're seeing shrink in growth, and so I think it's a bet on the
Yeah.
future. I don't know if
Well,
there's any economic data or because that is a lot of volume on that breakout.
Can I read you the headline because this is
Yeah, read
actually
me that.
really
I haven't looked
interesting.
at this.
This is
Go ahead.
really interesting. So OpenAI is going to allow users to shop directly in ChatGPT. Now, look at Google, down 1.2% today. Who eats whose lunch?
Grok.
But
That's free to the
that's exactly
government.
it. They are facilitating direct purchases from Etsy through
Hmm.
ChatGPT.
Interesting. I did not see the headline.
That is a big shot over the bow. That's a
Yeah.
big shot over the bow.
So there's
Wow.
your tangential, and here's the difference of everything we've said. I keep saying that Nvidia really isn't making money; it's pretending to make money.
That's why Shopify's up the way it is, as somebody
Yeah, but
said in the chat.
exactly. So this is making money just because you've facilitated purchases. This
Right.
is going to create revenues. Now, I still think that from a stagflation point of view, you're going to see it's just going to make it even more accelerated as
Right.
far as people trying to sell on there, people trying to buy deals. And yeah, I would say, like I said, I hadn't read the headlines. I was just assuming that we're going to do it based off of the idea of stagflation pushing to the next level.
Merchants will pay a small fee to OpenAI on completed purchases, the ad states. But now the question becomes, how are they going to I mean, are they going to do like cost per acquisition? Is this going to be like some sort of search setup? Wow, this is
Yeah,
not
pay
what I
per click.
expected.
Is it going to be pay per
Yeah,
click, pay per
yeah. I
acquisition?
mean, that's that kind of blew my mind. I wasn't really expecting them to go down that road, but it obviously makes the most sense. Um, Product results are organic and unsponsored, ranking purely on, well, that's not going to last long. Once they find out that they can make more money on unsponsored, they're going to give in on that. Rank purely on relevance to the user. If a product supports instant checkout, users can tap buy to confirm their order, shipping, and product details and complete the purchase without ever leaving the chat. Wow. And Google did the same thing with PayPal earlier this month. I didn't even hear that story.
Yeah, I knew that one. But
Good for
so
them.
here's the question for you though. Let's say, because this is certainly facilitating everything. I agree with that concept. But what if the consumer doesn't have any money?
Yeah, I know. I know. The bulk of the economy is being held up by the wealthy who are still buying stuff because they don't know what to do with their money.
Right.
If you have money, you don't know what to do with it. You don't know whether to spend it or invest in the most expensive stock market since 2000 and 2001.
Yep. And we're just driving it higher.
And all I do is just throw stuff away in my house. We're moving to a new house on Saturday. I think I got rid of half my house for Goodwill. How many pillows did I need?
Oh, we this last spring we did we did a dumpster and charitable donations. We went 9 times
Oh God.
so I had literally a dumpster dropped in my yard,
Oh,
and then a 40-foot dumpster, and then we took 9 trips, fully loaded to the local Goodwill. So
and how big is your house?
3,000 square feet, so not huge.
No. Wow.
Yeah, but I've lived here for 16 years, so I've never lived anywhere this long. So anyway,
Okay.
let me throw one other thing out there. I
All right.
do like since we're talking about gold and metals and mining, I've
Yeah.
said this 1,000 times. I'm going to say it one more time. You do not need gold to go higher to continue making money on the miners.
Right.
They're at top margin. I'm not backing away from this. Just because we had this shocking event from Freeport doesn't mean that Wheaton's not good. It doesn't mean that Nucor's not good, and Newmont and everything else. So that's the first side of it. And basic materials, you want to watch for these to bottom out and decide when we're going to be able to get the move higher. And stocks like Southern Copper, this is breaking out to record highs without copper really running up. So we're betting on margins. If you want margins and you want earnings, this is the place to be. Basic metals, mining, precious metals mining, and I'm sticking with that. Just as a little side note. And then it's just a matter of, do I buy long stock? Do I buy long calls? Do I do spreads? Do I sell puts? And the premium's not there for the puts right now. So it really is getting in at the right timing on small pullbacks, because these margins are not going away unless we see a collapse or a real change in the dollar's purchasing power.
I agree with you. It's hard for me right now because part of me wants to try to sell some credit on FCX. I just can't pull the trigger. So then I have to look at a company like Barrick, or I'm just buying the same closed-end fund that I always do, which is PHYS, gold stock chart. Let's see real quick. Barrick. It's down 5% today. Wow. 4%.
Yeah.
I mean, this thing just run. God.
Well, so it might be doing something like Newmont, it's gapped up and pulled back. So it's not, to me, this is a buying opportunity, honestly.
I mean, we're
Just
at
a matter of timing.
38.58. I think the question now is, does this turn into mania over the next 2 months? Do we have, this has been a pretty good basic burn higher. But now I think we get into the idea of a pure 25% from here mania.
And like I said, it doesn't even have to go. Just
Yeah.
stays here, I'm good. But if the mania, you're just going to hit there even faster.
What is your top gold mining stock? Asks JW Bullet.
So the problem was it was Freeport because they had the best debt. And so the shock and awe here, and I even said, you're going to, as much as the tragedy is a tragedy, and I don't want to ever diminish loss of life, the market reacts to what I think it's going to cost them. And so they reacted down here, and you're probably going to find something in here. It's kind of like when airlines have tragedies as well. You find where the cost of that wrongful death occurs.
Yeah.
And so you're going to probably see it get back, and it takes some time. Rio Tinto had their collapse, didn't have the loss of life, but they had the collapse, and it takes time to get back out. But they can usually produce money through their tailings and through digging out. They can still operate. And so you will probably find Freeport get back up to about $40. But I still am looking at Newmont. I'm looking for a pullback in Southern. I'm looking at Nucor. These are all potential, and Nucor is cheaper, probably one of the least priced ones. So to get the dividend and also participate, this could be the place to go. But really the safe way, just go back to metals and mining, XME, or the Philadelphia miners, gold miners. So
I think, just to conclude, I think you don't always have to just go with the miners themselves. You can also go with some of the royalty companies.
Yeah.
I like OR royalties a lot. It's up huge this year. It's up 110%. But I mean, buy on weakness if it comes, 39.30. And the other thing, pay very close attention to insider buying, because we're seeing ASA, which is a closed-end fund, ASA Gold and Precious Metals, Boaz Weinstein, a couple other people, they're buying this stuff at all-time highs. They're still buying, even though we have had runs this year of 119%. They're still buying. That says something.
All of these were all-time highs.
Yeah.
So those are all new all-time highs. So
Yep.
there's nothing scary about an all-time high. There's
Yep.
scary failure at all-time highs.
Correct.
That's when you got to pay attention. These are not failures. We broke out today.
And it goes right back to your thesis, and I think your thesis is right. Stagflation, and that's it.
Yep.
That's the word of the day.
Not to be scared. It's opportunity as well. So protect yourself and find the opportunity.
All right, Blake.
Hey, thanks, Garrett.
Jump on a call. Thanks for your time. I appreciate it. Have a good day.
All right, thank you. See you, everybody.
Bye, everybody.